Recording receivables. Essentially, receivables are what a certain company owns that is still in the possession of another company. There are many types of receivables, but the most common is accounts receivable. This is used when a company has earned a revenue but hasn't received the payment for it. For example, if John's plumbing service fixes Jenna's sink for $100, Jenna owes John $100. This amount owed is labelled as accounts receivable. It has yet to be received. Collectible accounts receivable are those which the company expects to receive. Let's use the previous example to outline how it is recorded. When John fixes the sink, he provides the service and thus records the service revenue as a credit in his journal. As he is now owed cash, he debits accounts receivable to indicate that he expects to receive the money. Jenna decides to pay on the 9th of July. Because he no longer is owed money by Jenna, John credits accounts receivable to close the balance and debits cash. In summary, one journal entry is made at the time of the sale and another is made when the cash is received. But what if John doesn't expect to receive the money from Jenna? This receivable would be deemed uncollectible. There are two ways to deal with this. The first is direct write-off. Using this method, John records bad debts expense when he believes that he will never receive Jenna's payment. Bad debts expense represents the cash which he would have obtained but didn't. We can now see how direct write-off is recorded in these journal entries. But should John use this method? While it is simple, it violates the matching principle because John doesn't match the expense to the revenue closely enough. He must match the expense to the period in which the receivable was created. This is done by recording bad debts expense at the end of each accounting period. But how would he know which specific receivables would be uncollectible? Using the allowance method solves his problem. It involves creating a balance called allowance for doubtful debts. This represents the dollar amount that John believes will be uncollectible. John estimates that $150 of the $800 in accounts receivable accrued in July will be uncollectible. If the accounting period ends at the end of July, John records the second entry as follows. Instead of closing accounts receivable, he opens the allowance for doubtful debts account. On the 5th of September, John decides that this balance will be uncollectible and writes it off, making this entry and closing both accounts. The allowance method allows John to wait until he is sure that he will not collect the accounts receivable before writing it off.